Okay, so we're live. Um, this is like this is a 5 minute. This is literally a 5 minute kind of conversation. So I'm just gonna get to the point. And you guys are more than welcome to talk, ask questions, do whatever you need to do. So what's going on, everybody? My name is Marwan, and I am a real estate guy. I've been doing real estate for 20 years. Well, a little bit more than 20 years. Since 1999, so 23 years. And I've been teaching real estate as a broker to agents and brokers in New England for the past 15, 16 years. And I've been doing real estate investments also for probably since 1999, right? Literally just after I got out of the military. So I've been investing in real estate. The one thing that about real estate is that as you get more successful and more into the industry, that tends to get a little bit boring. It tends to get a little bit more expensive, and you tend to do bigger and bigger projects. Now, my incentive has been that I love helping people out, and I love helping people do stuff in projects and things of that nature in real estate. So as I do these projects, friends and family members are asked to join some of my projects. And I realized that there is benefits in doing projects as a partner. So I started the real estate partner. Literally, the real estate partner, the sole purpose of it is to do real estate projects with other people. Now, many people don't know the concept and the idea behind the way that banks works. Is very simple. It's not complicated. A fractional reserve is essentially where you get up and you go and you deposit $100 at the bank. Your $100 deposit at the bank allows the bank to turn around and keep 10% of it and then lend the remaining $90 out. Then when they lend it to their client and customers, those customers tends to put that same exact $90 back into the bank, and they repeat the process. And that what essentially what happens is that $100 is now being lent out at $1,000 or more. And that's called a fractional reserve. Now, when people come to the bank to withdraw money, the bank not only doesn't really essentially have that $10 that they're supposed to have as a reserve because they lent 99% of their loan out already. They don't have sufficient liquidity, so they can't pay you back. Now, nothing wrong. There's nothing wrong with that. So there's nothing wrong with that. That's the way capitalism works. What is wrong is that they make 5, 6, 7% return on that money, and then they turn around and give you, the person who took the risk, 0.1, 0.2, 0.5, 1%, 2% of that money, and they keep the spread, the difference, right? So that issue, that problem, is what created the Silicon Valley Bank collapse because, well, people were not being paid. They were not taking the risk. The bank took the risk. And now they're wanting to withdraw their money because there's no incentive on the back end. It wasn't like Silicon Valley Bank did something bad. They just took the money and they put it into treasury bonds or whatever, low yielding, safe assets. And now when the customer is looking for their money, the bank is unable to pay it back. The bank collapsed. There's a run on the bank, and that bank went under. The issue is that you, the individual, can do the exact same thing. Now, this webinar is a scenario where you have $0 and you want to make something like 20% return or $20,000 return on your capital. We have a program that we're putting together for people that are falling under what's called the Regulation CF. Regulation CF is a crowdfunding platform where you put less than $10,000, $20,000 on an investment, and you don't have to be an accredited investor. An accredited investor means that your net worth is less than $250,000 as an individual, $350,000 as a married couple. But non-accredited investors can invest, $15,000 into regulated CF, regulated mean by Securities and Exchange Commission, regulated CF onto projects. What we want to do, or what we just started through the real estate partner, is where we are partnering up with 250 people. Let's say 250 people, where each person is going to invest $250 every single week into a fund or a pool of money. And then we're going to take those $250 and go buy real estate. Everybody's name is going to be on an LLC. And then we're going to buy the projects, and we're going to rehab, and we're going to flip, or we're going to rent it out. At the end of the 12 months, we're going to refinance the entire pool, or the entire aspect of the real estate. So if we have 250 people, each person is investing $250. At the end of every month, if there are 4 months out of the week, out of the month, 4 weeks out of the month, we should expect to collect $250,000. The average property value in America, the average is about $400,000. That allows us to put 50% down on the acquisition of one property every single month. At the end of the year, we'll have 12, 13 properties, depending on how frequent we charge the credit card. Now, I know that I said $0 out of your pocket for you to invest into this project. So why am I talking about you investing $250? Well, this is where you can come in as the bank. There are many ways that you can leverage or arbitrage $250. So for example, you can go and get a credit card and pay the minimum payment to the credit card. That is not your money. That's essentially the credit card's money. And every single will charge the credit card or the debit card or whatever that signature loan that I'm referring to. And you're not using OPM, other people's money, to do these projects. At the end of the year, you've invested $13,500 because there's 52 weeks out of the year. You've invested $13,500. At the end, we return $20,000 to you. So when we return the $20,000 to you, because we refinance the 12, 13 homes, or because we've sold some of these homes, you now take that 20 grand, you take the $13,000, you pay back the lender minus the cost of the interest rate, and then you keep the spread, the difference. Now, that is how you would do this without any money out of your pocket. You can also go get a signature loan. You can also go and do something like this. So the way that you would do this is literally with a decent credit, go out there. The other alternative would be to partner with other people, and then you would bring them aboard on this project. And because you are now the middle person, the facilitator, you share some of the costs and also some of the rewards associated with this project. But essentially, the pitch, the proposal is that I want to take my expertise and partner up with 250 people to do real estate projects to raise $3 million over the span of the 12 months. So we can do $3 to $4 million worth of real estate in the span of 12 months, hoping that we are going to be able to leverage and get 20% return on a leveraged asset, which will be able to return 40% to our investors. That's the 5-minute pitch. I'm happy to answer any questions. And also, if we are recording this call, I'd be happy to share all of the recording to everybody. So please type your questions and let me know what your thoughts are. So right now we have five people that have signed up. No one has invested. We don't want to take anyone's money until we have the 250 people. We don't want to take anybody's money. We want to just get people to sign up saying, yes, I'm interested in putting $250 every single week for the next 12 months. And once we have a list of 250 people, we make sure that we send a contract, they execute the contract. Everybody's on the same page. There's no confusion. This is not a liquid savings account. It's not. Then after that, we'll start pulling the money. So we started this thing about 7 days ago. We have 6 people that are interested, 6 or 7 people that are interested in doing the project. So we are looking for 250 people, $250 to raise $3 million to do real estate projects. You don't have to do anything except for every single week, drop $250. And here's why this is safe. The first thing is that everybody's name is going on an LLC. That's number one. Number two, every single investment that you're making is tied to a project, a property. So that something, God forbid, happens to me and I die tomorrow. You have an LLC where you own property. And before you make the next investment, you now have access to verify through public records that the LLC that you've put your money into own a property, and you can go to the registry of deed and track the property and see in fact that we bought the property. And when we sell the property, that information is also public record. You'll see how much we bought it, how much we sold it. You'll see if we have done any rehabs to it and things of that nature. But all of those things are transparent. It's not like a bank where you take your money, you put it in the bank, you have no idea what the bank is doing. That's not what we're pitching. So this idea is incredibly simple, incredibly direct, incredibly transparent, and it's verifiable through the web. So that's the first thing. For how long are the company have you been doing this? So we've done real estate project for 20 years. This one is going to be the first one where we're doing a crowdfunding CF. So Regulation D, back in 2008, Obama signed the Job Act. So that allowed this kind of adventure to take place. So this is the first time where we're going to, and that's also the reason why we're limiting 250 people, is because our team is a team of 3 or 4 people, 3 people in person, 1 virtual. So those 4 people, it will be difficult for us to manage more than 250 people. So we want to take 250 people, a small amount of $250 every single month, put it into a project. And that means that you would have invested essentially $12,500, $13,500. And then we turn around, we do the real estate projects at the end of the year, every single year. At the end of the year, we return the money to you. So then at the end of the year, if you're interested in doing it more, we can probably do another one. If you're not interested in doing it anymore, at least you get your capital back. But the idea is it does not have to be your money. You can leverage it. You can arbitrage it. You can have someone else, like a credit card, So for instance, if I took out a $13,000 credit card, my monthly payment to the credit card, the minimum would be like $250 per month or something like that. So, and that applies to the arbitrage of the scenario. As long as the return on the investment is higher than what I'm paying out, that spread, that difference is where my profit margin is. The minimum investment is $250. Obviously, you can invest more, but we're not looking for the higher investment. We're looking for the number of people. We want to avoid making the same mistake as Silicon Valley Bank, where they are niched and they only have like 2 million investors that have a bank account of $200 billion. And then when those people pull out, the venture collapse. If we have 250 people, even if 5 or 10 or 20 people pull out as we're doing these projects, we should be able to continue with the project where everybody else investment will be safe. So that's the real estate partnership is located in Massachusetts. The cool thing about Massachusetts is that the New England, I don't know if you're familiar with this project, Massachusetts offer what's called smaller scale multifamily projects. So there's a good rental stock, so we can buy 3 family and turn it into condominiums. We can buy fix and flip and things of that nature. But we're planning to do real estate project from Massachusetts all the way down to the Washington, D.C. metropolitan area. It's also known as the megapolis. So that is going to be where we're going to be focused on our energy on. And the reason why we're looking at $250, 250 people is that if we find good deals, meaning that the property is undervalued by 20 or 30%, and it has issues that we can fix, we can still capitalize on it by taking the money and rehabbing it. The reason why we're doing 12 months is because the FHA has just implemented a 12-month cash out refinance restriction. So we have to wait for the 12 months. That's the reason why we're doing 12 months. But at the end of that 12 months, we are refinancing as a package, or we're disposing of the property so that all the investors get their capital back and the return on their capital at the end of the 12 months. Yes, it's open to all U.S. states, and it's open to everybody. So anyone that is interested in investing in this in the U.S., they would just text us and email us their name, their phone number, their email address. And then once we have a list of 250 people, we would close because the idea here is that I'm a real estate guy, not a fundraiser. So I don't want to focus all of my energy in raising capital. I want to focus on my energy on doing real estate deals, the things that I love to do. So the idea is I would get the 250 people. Everyone would commit to the $250. We would automate that collection of the funds. We would do the real estate project. The idea is that month 1, everybody's putting $250. by month 2, before the next deposit is made, a property is purchased and the appraisal is done, it's sent to everybody. The LLC is on record. You can check before we take the second month payment. And then we can do that 12, 13 times over the scale of 1 year. So at the end of the year, all 250 people for an exchange of $13,000 would own shares of 13 homes. That's the plan. So will you wait to feel? Yes, I will. So I am looking for everybody to come up and have a list of 250 people. Now, obviously, if I get 200 people instead of 250, I will just chip in the 50 people's fund. What that essentially means is like I will put in $50,000 every month to make sure that we have the $250,000, so that every single month we're doing a project, and every single month we have a property under the partnership that the 250 people members belong to. So if I don't have the 250 people or 200 people, I'm not going to start the project. The reason why is because it's costly. It's costly to buy. It's costly to maintain. It's costly to fix. So it requires a lot of capital. And I want to give myself a buffer in case, let's say if I decided to do with 100 people, the 100 people that I bring in, and say 20 people out of that 100 leaves, it puts us in a $70,000 a month kind of thing. $70,000 doesn't buy property in the New England market. New England is very expensive, so it's not going to solve that problem. So that's the reason why I need to get the 250 people or close to that as possible. I don't do credit check. This is not you. So and there are ways that the $250 can be done. So for example, you can go and get your own credit card. You can go and do your own signature loan. Because I own a real estate school, I can charge a flat fee from you and then get you financed through PayPal and then work something out. There are ways to do it. But the point of this little call is to let you know that if the money is that objection, you don't have to worry about that money being the objection, because we can find a solution around. All I'm looking for is 250 nice people that want to do 12 or 13 deals with me over the next 13 months, trusting that I have the experience and the knowledge and that I can guide the team into 13 successful projects. Now, I can't guarantee that all 13 projects are going to be successful, but if you are dollar cost averaging into 13 different projects, some of them are going to be home runs. Some of them are going to be great deals. Other ones might be bad, but the average should be a 40% return on everybody. So there's no credit check, no nothing. The only requirement is to let me know, yes, I'm interested in doing this. Yes, I can afford the $250. If I can't, I can find a place to get the $250. And once you have all of those three things, and I have the 250 people, I'm starting the project. I already have a list. As a licensed real estate broker, I have a broker's license. I can go on MLS and find all the deals. I know what to look for, what not to look for. And I can find really, really good deals and then get everybody's money and put it into the project and then share with everyone. Let them know, what is my decision factors? Why did I pick this one? What am I looking for? How am I going to exit this position? All of the things that I need to do. What is the expected return? So that everybody is comfortable and happy and at peace, so that they don't lose sleep. And also the reason why I'm doing a $250 is so that worst case scenario, if you lose sleep overnight, it's $250. You can, stop investment and things. It's a contract between us and you. So if you don't continue to invest, there's nothing we can do about it. You know what I mean? But it's going to affect all the other people if a majority of the people stop investing. Now, because it's real estate, it's not liquid. If you want to get out, we have to sell or refinance the properties that we already have under our belt. The other thing we can do is we can sell that position to another person. So if we have a waiting list, let's say we have the 250 people and other people have heard through it, but we've already closed the door. We can put 5 or 10 people on a waiting list. So if someone wants to get out, we can sell that person's position to someone that's on a waiting list and then continue to move on. So if I decide to do it, what email can I write and what number can I? So let me see.
Hector should have that answer.
Yeah, I will put that on the chat.
Yeah, so just, and then, so info at the real estate partner. So that's the way I would do it. So sorry, I came in late. No worries. You waive the. What is the return percentage and the time? So the I'm looking at collecting $13,500. $13,500 is what I'm looking at over the span of 12 months, and I'm returning $20,000 to you. Now that is greater than 40%, but essentially for every $250 you give me, I'll give you 125, and at the end of the 12 months, I give it back to you. So it's about 60 or 70% return on your capital. That's what it comes out to be, because the first couple of months, $250 would have earned 40%. But if I don't keep your last month's $250, for example, you give me in December or next January, you give me $250 every single week, and then I return $20,000 to you at the end of March. That first $250 is essentially not earnings. It's essentially earning like 70%, 80% return per year. Okay, so that's the interest rate, but the interest rate is roughly approximately 40 to 50% return on your capital. So yeah, are you the founder, owner, or what's your role in this? Yes, I am the founder of the company. No worries, I am the founder. I started this project. I started the EIN and all this stuff 6 months ago, but I've been doing real estate for 20 years. And this venture is regulated by the Securities and Exchange Commission. So we do have a Reg CF in place that if anyone wants to see the operating agreement, all the information, they can on that list, they can let us know and we can send them all the there's a SIC number, a CIK number, and all of those things. So we have all of that stuff registered with the Securities and Exchange Commission. So it's up to par and you guys can absolutely verify it. So let me see. Yeah, so I'm doing a Zoom here and I have Instagram here. So I'm just making sure that I've answered all of the questions. All right, so I know this was a 5-minute conversation. If you have any questions, I'll be happy to stick around to answer any more questions. But if not, make sure to follow us on the social media and let us know your name, your first name, last name, phone number, and email if you're interested in going this 12-month venture with us. But I can tell you that the way that I envision this is I am pro investing in myself, then pro investing in banks that takes risks, invest my money, and then belly up. You know what I mean? And all of that for 1%, 2% is not my thing. So I prefer owning my capital in real estate assets so that it collects rent, it grows in equity, and it hedges inflation. That's what I'm a big fan of. So with that understanding, my goal is to try and accumulate. Now, a lot of people live paycheck to paycheck, so therefore it's a little bit more difficult for them to accumulate. So we're trying to make the entry barrier so much smaller that even if you don't have any money, if you have good credit or if you have access to resources, you can invest in this. But please tell your friends and your family, anyone that you think might be interested in something like this, please let them know and have them join us so that we can start doing the real estate project instead of spending all these months looking for 250 people. So if you have friends and family that that could benefit from this, please let us know. Okay. Thank you so much. I appreciate it. Yeah, I know this. Yeah, a lot of people don't realize they take the money and they put it in the bank and they think that their money is safe at the bank. Now they're seeing the thing. You know what I mean? Yes. So is there another way to invest other than $250? Nope. That's it. It's the only way to invest every single week. Automated. Think of it like a credit card bill, like a cell phone bill. Like that's it. You just put your credit card into a system every single week. Our computer charges $250. We take that money at the end of the month. We go buy real estate. At the end, we share the profit. That's it. So that's all. Yes, you can buy 2 shares. You can buy 2 shares. You can buy 3 shares. The idea is that every 1 share is equal to $250. Ideally, I would like to have 250 people investing each 1 share every single week, so that at the end, it's easy to do the math. And suppose that one person invests $4,000 a month or $1,000. If that one person steps out and say, you know what, I don't want to do this anymore, the issue is that we have to find 4 people to replace that one investor. And we are trying to avoid that. So ideally, we want one person, $250. Also, most people are not going to lose sleep over investing $250. You know what I mean? That's like 3 cups of coffee every day for a week is $250. So, you can just deprive yourself from Starbucks and you'll be okay. So it's not a lot of money. All right. Any other question I can answer before we go? Awesome. Thank you so much for joining. We really, really appreciate this. And we hope that you guys are going to support and help us.
Someone is asking when are you going to start thinking, like, when are you planning to start?
As soon as I get 250 people, I will start. So if I get 250 people tomorrow, I will start tomorrow. If it takes me 1 month to get 250 people, I will do that. So what I'm doing right now is collecting names, first name, last name, email, so that I know, like an application. So I know that the people are interested. And as soon as I get to 250 people, we'll start picking up $250 from everybody and doing real estate projects. And again, remember, very minimal risk, because the name of the individual goes on an LLC. That LLC is the one that's buying the real estate. And then once we acquire the property, you, the investor, will know how much we acquired it for. If there are any rehab, you'll know how much we spend on rehab. If we sell it, that's also public record, because a closing statement and a deed gets placed on the purchase price. So there's no way for me to hide any kind of issues if there's a question of trust. The only thing is to find the people that are willing to take faith and say, you know what, this sounds like a good thing that I should get involved. And it returns 40 or 50% return on your capital. There's nowhere else you can get that. So if you are interested, please let me know. Thank you so much. This was awesome. It was fun. I'll see you guys later, okay? Thank you. Okay, Hector.
All right. Close the live event.
What happened?
You have to close the event here on StreamYard.